A lot of people laughed at me when I said I'm not ready to buy this dip just yet, and that I'm waiting for a little bit more on the fear and greed index. Now here we are. Bitcoin's holding up pretty well, but if you look at the altcoins, I'd say it's not looking good. Now the big question is it time to buy yet? Am I ready to put my money down, or is it not time to buy it? That's what we're going to be talking about today. Also, I'm going to show you one investment philosophy or one investment trick. And if you apply this investment trick, you are guaranteed to make it in this bull market. So it's going to be a massive show. Friday, big banter, 3 of the biggest guests in the world bringing us crypto love and crypto wisdom. Can't wait for you guys to hear what they have to say. Let's go. You know, the thing with making crypto content is, specifically in a bull market, is that everybody only wants calls and everybody only wants you to tell them what to buy. But sometimes the best trade is not to trade at all. Sometimes the best trade is to just sit and be patient. And over the last couple of days when I've said, guys, I'm not ready to buy this. I don't believe this bounce. I don't believe it. We're in the clear. Everybody was like complaining in the chat. You're so bearish. You're starting to sound like Gareth. Yet here we are now. And the buying opportunities are starting to present themselves. But I'm still not ready to buy. And I'm going to show you today why I'm still not ready to buy. I'm also going to show you what one investment philosophy that one of our guests has brought to the table, which I think will absolutely change your life. So listen, if you're not already subscribed to the channel, you know what to do. I don't have to tell you again, subscribe to the channel, destroy the like button. I know a lot of people were speaking about GUMMY in the chat. We did make an announcement earlier on GUMMY. We've changed the tokenomics slightly. And when I say we've changed tokenomics slightly, we've made a decision that we don't want to raise any money. We made a decision that GUMMY was born as a community project. And initially we thought, okay, maybe let's do a raise and put the money into liquidity. But we made a decision that GUMMY is a community token. We never want to be perceived as a company that took money from people for a token. And if a token dumps, to be blamed for a token dump. So we said, look, the only way to get GUMMY is to get it through an airdrop. No way to buy it. There's not going to be no sale, no pre-launch sale. No one's getting the opportunity to buy in. The only way to get GUMMY, to make it completely fair to the community, is to actually get the airdrop. Now, when we do the airdrop, we think GUMMY is going to be one of the biggest held meme coins in the world, and then it should fly. We've also got an amazing market maker. We've got DWF market making for us. So I think it's going to be an absolute gem. So how do you get your GUMMY tokens? Well, because it's only an airdrop, we're probably going to give away a whole lot more of the supply. The only ways to get it are: 1, you can farm points on Banter Bubbles, and you can see the Banter Bubbles on the website and on the phones has now got the points. 233,000 points. Counting, I had half of that yesterday. The other way to get it is to sign up with 𝗏𝗏𝗏. 𝗏𝗏𝗏 is our new partner exchange. Amazing exchange. They're going to list a lot of assets for you guys, the Banter fam. Sign up to 𝗏𝗏𝗏, deposit money into your 𝗏𝗏𝗏 account, because a lot of people are playing the game of just signing up and pretending that they're real accounts. They're not. Sign up for 𝗏𝗏𝗏. They're going to be listing GUMMY on the launch date. You're going to be able to receive your tokens and actually trade them on 𝗏𝗏𝗏. So go sign up. By the way, don't tell anyone, but 𝗏𝗏𝗏 doesn't do KYC. There's no KYC on 𝗏𝗏𝗏, which means that anybody can trade on 𝗏𝗏𝗏. So all you do, you sign up on that link over there, and you get that. The other way to get an airdrop is to actually join Sheldon Sniper School. Now, there are a few days left to join Sheldon Sniper School. This course is worth at least $3,000. If you can sign up and get approved in the next 4 days, not only are you going to have a life-changing experience when it comes to trading with a whole lot of the gurus. This is the best trading course I've ever done. So just listen to some of the magic that you'll get in this trading course.
We're actually possibly coiling up. And you know what's nice about this too is look at this pattern that formed here. Look how we were trending slowly down. Look how volume was tapering down.
And look at that major to your left. Yeah,
look at
that was your signal right there that the selling was really over. You had this one huge move down, major volume. Anyone who was looking to sell probably got out.
And then what's nice about that is look how pattern went sideways. Look how volume tapered down, guys. And the moment we broke the trend, look what happened.
That's right, spike in volume.
So you want to learn about how all these indicators work and how to make money. It's free. You'll never get a trading course like this for free. And you've only got 4 days to sign up. So go and sign up using the link below. You have to use the link below to qualify. You'll get an airdrop, and you'll actually have the time of your life with, I think there's probably 5,000 other traders that have signed up to this course. All right, so that is the GUMMY announcement. Go and farm. Happy farming. Open your 𝗏𝗏𝗏𝗏 accounts. Farm on Banter Bubbles. Let's blow this thing up. This is going to be one of the biggest meme coins in the world. I tell you that much. And again, remember, no one at Banter is going to hold a single meme coin. We never want to be perceived as people that made money on our community with the token. This token literally is a token that's going 100% to the community, and I think it's going to be one of the biggest meme coins out there. All right, let's not delay the alpha anymore. I've got 3 amazing guests for us. They're going to bring us incredible alpha. Just before we start, remember that the Friday Banters, which are our biggest shows with the most alpha, are brought to you by NordVPN. You're going to make a ton of cash in this bull market if you land up losing your money to a hack or to a scam, or because someone is tracking your IP address, which, by the way, is broadcast to every single exchange, every single DeFi app, everyone that you interact with is recording your IP address. This is the easiest way to get hacked. This is also the easiest way for the government to get your details. Take security seriously, because if you make money in the bull run and then you go and lose it to a hack out of all things, you'll never be able to forgive yourself. And especially because it costs $3 a month to protect yourself. Literally, it costs $2.98 a month to protect yourself. My feeling is if you're going to be in crypto, you need to get a VPN. You need to get threat protection because you guys are surfing crazy websites with lots of malicious websites. If you don't have threat protection, you're going to click on a malicious link. You're going to connect your wallet to a malicious link, and then it's going to drain all the money out of your wallet, and there's going to be nothing you can do about it. So NordVPN, threat protection, make sure that you've got those in this bull market. So I've got 3 of the best guests here today. I've got a lot that I want to talk about. I want to talk about where we are in the cycle. I want to talk about meme coins. I want to talk about AI. I want to talk about other narratives. Lots to talk about, so I'm not going to waste any more time. Got our guests here, 𝗓𝗏, 𝗕𝗏𝗡𝘆, Vinny, guys, all been here before. Welcome back, guys. Nice to see you guys.
Good to see you.
Everyone's smiling. Yeah. Everyone's smiling. It's bull market vibes. Everyone's positive, or at least that's what I thought. And then I see Vinny, who is always the contrarian, talking about potential another rate hike. I mean, you don't really believe there's going to be another rate hike, right? You don't really believe that.
No, I don't believe it will be. I believe that there's a 50-50 chance, and I don't think the market's pricing it in.
I've been
saying this since I think November. I actually retweeted one of my old tweets from November or December, and this is at the time where everyone said there were 7 rate cuts going into 2024. I explicitly said 2 to 3 max starting at Q3 at the earliest, and the market was. And I actually said in my tweet that the market was mispricing the Fed's intentions, and so far I've been right. And I still think we get one print above 4%, and the rate hikes are back on the table.
Rate hikes when everyone's talking about rate cuts. Look, 𝗓𝗏, 𝗕𝗏𝗡𝘆, I know you guys aren't macro experts like Vinny, but do you have any opinions as to where we are in this rate cycle?
I think 𝗕𝗏𝗆 said yesterday that the cut was kind of on the table. So I again, not a macro guy. It'd be pretty crazy to think that. I think we're pretty close to soft landing, whatever that means for different people. But yeah, it's macro's a tough game to play.
Very tough game. I will say, I think Vinny is right in this, that probably if you were to be surprised, if the market were to be surprised, they would probably be surprised in that direction. Like that's probably the thing that nobody's expecting, and that's probably the Max Payne situation. Is like things just keep accelerating, reheat, and then you have to do a hike, and then that's just gonna that would be crushing it.
That would be point of Max Payne. Okay, I don't want to spend too much time on macro because I think macro is just a bunch of people guessing about big things. I want to speak more about the crypto cycle. There's been lots of theories.
Let's just point out that gold is, as it stands right now, $2,300.
Yeah, so gold is at all-time high. So what are you saying about gold being at?
If we're saying there's a soft landing, then why is gold saying it's not? Because gold doesn't go up if there's a soft landing, guys. Gold goes up if like the shit's gonna hit the fan.
Yeah.
So what's your thesis here, Vinny? While we're here, what's your thesis? Is your thesis that inflation prints another print above 4%? Everyone says, oh my God, we were expecting rate cuts. We're going to get more rate hikes. The market goes into a panic. The NASDAQ tanks, the Dow tanks, Bitcoin goes up, and the rest of crypto tanks.
I think anyone who speaks in absolute terms doesn't really understand how things work in the world, right? So I'll give you percentage adjusted perspectives. I think it's at least a 50-50 chance that we go above, we hit the 4 handle or above. I don't think it's right now it's priced at like 0% or whatever, 2%. I think that's not true. I think we printed too much money. There's a lot of money out there that's still floating around. inflation is sticky, and even though the Fed believes that the current 5.5, I think, the mid range for the Fed's fund rate, they believe that is restrictive enough to curb inflation and get down to 2%. That is incorrect. That is not restrictive enough. And what's happening right now is the rest of the world is having to raise rates. So now you have Japan, which, by the way, raised rates, I think a quarter point last week, finally went positive rates for the first time in, 17 years. And guess what? The yen didn't strengthen, it weakened, okay, in response. So we're in this problem where foreigners are going to start selling treasuries, and they have to. Yields are going to rise some more. The Fed is going to be forced to have to raise rates to deal with the inflationary issues. Inflation is too sticky right now for us to write off that 5.5 is the right number Fed funds rate. And I think they may have to tick it up just a little bit more to put more pressure on the market. The other thing is the labor market is still pretty strong. It's like they say it's coming into balance with 7 million illegal immigrants coming in this past 12 months. So, well, let's just talk about that, right? We have a lot of illegal immigration in the U.S., which is kind of being counted in the numbers as to why the economy is not, the labor market isn't too far out of balance. It's because we've got a lot of illegal immigrants in, and that's helping the economy in some ways curb the labor problem, the labor shortage problem.
Okay, so I mean, what you're describing is really a Max Payne scenario. It's the whole market talking about rate cuts, and it's Powell going the other way. I mean, if that happens, risk assets get destroyed. I mean, is that what happens?
It's not a Powell thing. It's not a Powell thing. The Fed's mandate is low unemployment and price stability, with a Fed fund rate target of 2%. The third, remember, you guys remember RoboCop? Like, he had those like 3 prime directives: protect the innocent, uphold the law. Well, and then he had this fourth one, which is classified. Okay, Powell has a third one, which is classified, which is prevent treasury market dysfunction. And so he has to ensure that the government can still sell bonds to finance the $7 trillion worth of debt we're going to have over the next 18 months. And, whatever that number is, it's some crazy number in terms of the projections of what they want to spend. And so he has to balance all these things out. I don't think he has much of a choice if you see a 4-handle print, or the only option is to say we're abandoning the 2% target and we're going to move it up to 3%.
I don't think he's going to do that. I don't think he's going to do that. I mean, he's been pretty clear.
No, he won't do that. He won't do that. But that's the only thing that he could do to prevent the hike. If he abandons the 2% target and the Fed, and they can't, I think it's a Congress thing or whatever else, they can't abandon it. So they have to go down to 2%. And so we're stuck, guys. If we see a 4-handle, you're going to see a 20% drop in risk assets on the day.
Let me ask you a question.
You have to remember all the Fed governors sort of came of age in that 70s inflation crisis in the United States as well, right? And I think there is this human psychology thing where you sort of in your 20s and 30s, when you sort of like learn how to do your job, that bias is with you forever. And so, like anybody that came of age in venture in 2010 to 2020 thinks the world always goes up and to the right. That's just their bias, right? And so when the world changes, all of a sudden, it's painful. But what that means is that the collection of humans there has a baked in bias already, which is inflation is sticky. We can't let it run away. We have to crush the inflation. So their bias is actually going to be in that direction too, in my opinion.
So Vinny, percentage-wise, what do you think? Give me the percentage cut or percentage. What's your percentage at the next move is a rate cut? What's your percentage at the next move is a rate hike?
I say 0% chance of a rate cut in the next move. 0%.
No, I mean the next move that the Fed makes, i.e., whether it's now or in 3 months or in 6 months.
Sorry, I thought you meant the next. Sorry, I think we 50-50 on a 25 bip increase or decrease of the next move. Okay, it can go either way. The next meeting, 0% chance we'll get a cut.
Agree.
0%.
Agree. Okay, so I think we're all aligned there. I don't want to spend too much time on the macro. I do want to spend 2 or 3 minutes on where we are in the Bitcoin cycle. And the reason why I want to do that is because we are, as far as I remember, a couple of days out of from the halving. I think we're 17 or 16 days away from the halving. It's the first time that we've hit an all-time high before the halving. Some people say it's a left translated cycle. Everything's happening quicker. It could be a shorter cycle. Other people are saying, look, we had the ETF approval, which was an unnatural event, and we're still going to have the halving, and the cycle's just going to continue as normal. Keen to hear your views in terms of, 𝗪𝗡𝗆, you guys are investors. How are you looking at the landscape? Ishan, Vinny, how are you guys looking at the landscape? Are you factoring for a much shorter bull market, or are you factoring for normal crypto bull markets and just ETF, which just helped us along the way?
Well, first, obviously not financial advice. Don't ever listen to anything I say about
nothing in this show is financial advice.
nothing I say.
Except when we talk about cats later. When we talk about cats later, that's financial advice.
You can talk. That's fine. Yeah, that's right. So I tend to think, the reason that we get these cycles actually is sort of twofold. One is liquidity, and two is human psychology. And the liquidity is going to be what it's going to be, and you can't really control for that. But the human psychology is sort of invariant. And what I mean by that is you have this behavior where there's a bunch of market participants who want Bitcoin because of what Bitcoin is. It's your insurance policy, it's your digital gold, whatever you want to call it. There's a bunch of other people in the market that look over there and say, wow, there's going to be a lot of those people. There's going to be 1 billion of those people. I should get in before there's 1 billion of those people. And they start to speculate on what that price will be. Price goes up. People start looking around. The people who are holding over here are like, wait a second, I'm rich now. Like I made a bunch of money. And then they start rotating out into other stuff. It's a natural wealth effect. They keep speculating. And then all of a sudden, all of these people are like, wait a second, there's not that many of those people. Like, did we get over our skis? Are we too far ahead here? Like, what's going on? This can't possibly be worth this right now. And then the whole thing sort of unravels. And for some reason, that takes about 4 years. It takes about 2 years for people to sort of like remember that things are crazy town and this isn't natural. And it takes about 2 years for people to forget all of that. It takes 2 years for people to forget the pain. And so you can enter a bear cycle. So I think it's just that's the weird emergent property of human nature. And humans haven't changed. So I don't see any reason to believe that psychology has changed. And so it's roughly going to be similar. Now, the dominant thing is still the liquidity, right? If there's no money, if you're at like 8%, inflation, like these things really factor in, and you can't really predict that. And that, which is why I always say like not financial advice. And I also say like, don't think about the short term. Like the hack that we have as venture investors is we don't think about what's happening over the next 12 months. What we think about is what happens over the next 7 to 10 years. And so like the two questions you like we're always asking are, one, what is not going to be different 10 years from now versus today? And two, what is going to be dramatically different 10 years from now versus today? And if you have good answers to those questions, you can like directionally, you have a lot of margin for error. Like you can be off by 50 or 100% in your valuations in a Series A and still have a killer venture fund. If you basically answer those two questions over a 10-year time horizon. So I actually think like the short term, like you either think about this on a 5 to 10 year time horizon, or you're probably just speculating and you're going to get burned.
So it's funny. You said because yesterday I did a show, and on the show I went through my portfolio, and what I realized about my portfolio is that actually all the top 10 holdings in my portfolio are tokens that I've held for between 3 and 9 years. So even though everyone seems to in the bull market be investing on a short-term time horizon, ultimately the tokens in your portfolio that land up accruing the most value are the ones that you've held for the longest, because these are protocols that are actually really changing the world. So I guess it's just a time frame thing.
There's also, I think, a thing here where I get it. Like and we can talk about this like in the meme coin context too, but or this sort of financial nihilism sort of concept that's being thrown around in crypto right now, or generally in markets. I get it from the perspective of people who don't have a lot of money and feel, desperate. And there's a lot of reasons for people to feel that way. And they're speculating and they're sort of buying lottery tickets. I think I just saw a stat somewhere that in the United States, people spend more on lottery tickets than like live music, sports events. Is this the graph? I don't know.
Yeah, that's the graph.
It's wild. It's like $110 billion a year. It's just some like ridiculous amount of money that gets spent on these things. And unfortunately, it skews towards poor people. Like the less money you have, the more likely you are to spend money on lottery tickets. And I don't think it's because people are dumb. I think it's because it gives them entertainment and it gives them a little bit of hope. And so if I get for a segment of the population, if they want to speculate, like I actually understand that. I don't think it's something they should be doing, but I understand. For everybody else, if you're not in that situation where you're sort of worried about, okay, I'm despondent and I don't know what happens over the next 5 years and I should just, give it a shot, I'd buy some lottery tickets. I think most people would just sleep much easier at night and have way less stress if they just bought things that they're like, I just want to hold this forever. And if you went in with that mentality, actually what it does is it frees up your brain to think about things that are other big opportunities. So rather than this like short-term mindset, now you can spend 90% of your brain power thinking about what are the things that don't change over 10 years or do change over 10 years and accrue more assets or things that you want to hold for 10 years. It's sort of the Warren Buffett approach. It's the like get rich slowly, but it's really hard. Like that takes 10, 15 years.
I do want to talk about the cycle, but while you're speaking about this mentality that's happening now in the crypto market, so we have meme coins at the moment. I've said that I think meme coins are amazing, because I think that we've created a culture casino. We've created a new mechanism for people to take bets on culture. I read a tweet which actually really, really resonated with me. I'm going to try and call it up here. It's this tweet over here. It's from Camilla Russo. She says, meme coins might be to this cycle what ICOs were for the 2017 run and the NFTs were for the 2021 run. Two generous views. They're more honest version of ICOs because they're not really promising anything. And they're more democratic version of NFTs because you can trade them very quickly in very small amounts. And then what I did was I actually tweeted and I asked people, do you feel more connected to your NFT community or your meme coin community? And 82% of them said that they feel more connected to their meme coin community than they feel to the NFT community. And so I'm very, very, very bullish about meme coins. But the one part that does make me bearish is when they start to distract people from real investing. So, I think that now where the market is and what I'm watching in the market is people have forgotten about investing. They've forgotten about doing real research. They've forgotten about looking at protocols that are actually going to change the world over multiple cycles. And they're spending all their time and brain power trading, I don't know, Brian Armstrong's cat and Ansem's cat. And I don't know, Vinny, do you have a cat?
No, but I know Raj has a dog.
Exactly. So, I mean, so my thing is, I really love this meme coin movement. And we should probably talk about it a little bit now. I'm just worried that it's distracting people from real investing, and that it's taking capital away from real investing. It's taking mind share from real investing. It might even be taking developer power from real investing because you can make so much more money on a meme coin by just launching a meme coin. Before we logged onto the show, I saw that 𝗏𝗡 from Aptos, he tweeted about a meme coin, and I was thinking to myself like, I know what you're trying to do. You're trying to bring people to your project via meme coin, but as a project founder, I also want you focusing on uptime, TPS, development of your ecosystem, etc. Keen to understand how you think about this, Ishan. I know you're quite active.
Yeah, so this kind of plays into like the larger thesis of like the financial nihilism, but like to another extent, it's like the Sky Casino thesis of like, hey, we're all just like kind of speculating on these different things. I think it's a big reason why it's like you have these different posits that you have of places that you can speculate on this. So like right now you have this cultural casino that's getting really popular. You obviously see this like really the network effects are growing on Solana. It's a big reason why I have a really strong thesis on kind of decentralized, sports betting, gambling casinos, online casinos are going to make a really big comeback because it's a lot of the same ideas behind financial nihilism. Like, hey, we have to make it big, or we have to entertainment, and the line between entertainment and investing is kind of blurring for the average American that doesn't have the capital who's investing, under 5 figures or under 6 figures in a single investment. So I think that's kind of like, I think there's just this entire movement that's happening where it's not just investing to, get rich over a long period of time, like Warren Buffett kind of value investing strategy, but it's more, can I have fun while I invest? And can I also hit the lottery ticket moonshot? And then you combine all these things together. And that's where you get this idea of, you're going to keep betting, you're going to keep losing. The casinos are really big in Vegas for a reason. So I think it's all just kind of part of the same shift that's happening in average consumer investing that we're going to continue to see grow.
So healthy or not healthy for blockchain? Like, I mean, net, give me the nets here. Net, is this a healthy thing for blockchain or is this an unhealthy thing for blockchain?
So net, you think about value creation. Is there value being created here? And can that extend into other things? I would say net, probably not. It's just a bunch of people passing money around in certain respects. Now, if there's like actual innovation that comes out of this, in order to create like positive sum, like pull together type of stuff, that's interesting. But net, like it's just a bunch of people passing money to each other, mostly going into smarter hands than.
I call meme coins crypto musical chairs. It's all fun. It's all fun until the music stops and no one has a chair.
Okay, but I mean, Vinny, I want to remind you something. I want to remind you something. You said the same thing to me, not the same thing, but you said something similar to me when CryptoKitties launched. And I remember we had a conversation, and you said to me, I can't believe that cats clogged up the Ethereum network, and it was like the craziest thing, and there was a whole uproar about it. And then fast forward one cycle later, that was the birth of NFTs, and NFTs became the best fun that you could have in the last cycle.
How much is your kitty worth right now?
My kitty is not worth a lot, but my punk is still worth a lot. Because
so all you're saying is basically we're taking money from retail to line the pockets of developers in the hopes that they build something for the greater ecosystem one day, but screw the retail guys who bought the kitty in the first place.
I don't see it like that. I see it as we don't know
But if you bought a kitty back in 2017 and you paid some crazy number for it, it's worth nothing today. It's not investing. You said that yourself.
I know, but I think it's financial experimentation. So I think it started off with a kitty, and it landed up building an NFT token standard, which can become identification, which can become ticketing, which can become.
But who's funding it and who's making the money? It's musical chairs. You don't have a seat. You don't.
Well, I mean, it's just a property of markets. I mean, this happened with fiber optics. This happened with railroads. Like this is just like a thing that all markets do. So I mean, I agree. In crypto, it happens to be retail that gets
the price.
But yeah, but it's whoever the early market participants are basically pay this price. It just happens to be in crypto that it's more accessible to retail, and so they're the ones who are going to pay the price here. Which is that's what sort of pulls me in two directions about it. It's sort of on the one hand, I think at the aggregate market level, it's clearly additive. This is just a property of markets. If anybody hasn't, there's an economist by the name of Carlotta Perez, and she's written about this, that basically in early markets, you need this kind of speculation. And what happens is you get an overinvestment into things that otherwise would not have gotten investment. But that gets you over this sort of like market threshold that you needed to make the technology viable, because otherwise you look at the like capital expenditure that you would need, for example, to get a new L1 off the ground, and it just wouldn't make any sense. Or to get railroads off the ground, or so it's just sort of like it's actually like net is positive for the world, but is extremely negative for those market participants in the early days.
Exactly. So the real question is like, how do we treat this? How do we like? I think it's okay if I lose money on it, and I've bought tons of NFTs. So have you guys, I'm sure. We've experimented, but I can lose. I mean, I've lost 7 figures in NFTs.
I mean, this really gets at the heart of the matter. I think is like a lot of people, I think right now they're in crypto have survived the bear market, and they understand what's happening. They understand that it's a casino, and they understand that they're walking into the casino. Where you start to get a little bit, I get nervous is in 6 months or 12 months, do the people walking into the casino think that they're walking into a casino, or do they think they're walking into like the NASDAQ? And once you have market participants that don't understand what the game that is being played, that's when you have a real problem. And that's what I worry about. So I don't worry about it in the short term, but like, man, in 12 months, if it's like people speculating, like taking out loans against their houses or that kind of stuff, that's really bad.
That's why I get really nervous. That's happened in 2021. People were mortgaging their houses to buy
it's really that's right.
So I just want to show you something. This is the yearly performance of all the crypto tokens, top 100 crypto tokens. You can see that the 3 biggest performers this year are all meme coins. So right now, if you look at the annual performance, the 3 biggest returns, I'm going to use the word returns because I don't know if it's an investment, it's a trade, are all meme coins. So I mean that's where the market is. Question: do you think the meme coin cycle, this meme coin thing, lasts until the end of this bull market, or do you think it gets flashed out way sooner?
I think these things have a way of going like way longer than you expect, and the fact that we haven't yet seen. I mean, what you kind of need to see are those late cycle signals, right? It's not just your Uber or Lyft driver talking to you about meme coins, but it's also the press is talking about how ridiculous it is. There's like, 2 18-year-olds on the cover of big magazines that are now worth $10 million off their meme coin trades. There's like meme coin funds that are able to raise $20 million. Congress has to hold a hearing about this like meme coin shenanigans because like they're worried about it from like some systemic issue perspective. Right? We haven't seen any of that stuff yet. And once that happens, that's when you're late cycle. But this is still that's why I think like right now, I suspect most market participants right now understand the game that's being played. They understand it's a game. They understand it's like going to the casino.
You know what?
When you say market participants, if you think it's the previous cycle participants, I agree. Probably most of them understand it's a game. New cycle participants do not understand that at all.
Yeah, I mean, I can't wait for the Congress hearing. I can't wait for the Congress hearing and to watch the Elizabeth Warren price go up and down. I think that would be amazing. So
can I throw out something? Just double click on what you said earlier on, Ryan. There's a whole thesis that I have around this cycle, which I'm very concerned about. Previous cycles, and it's part of the compression thing that you mentioned. Previous cycles, you saw some sort of in terms of at least absolute numbers and liquidity at the very least, you saw some wealth effect that gets created over a period of time. Maybe it's a 18-month, 2-year cycle. We've had a very short wealth effect creation cycle in 4 or 5 months. I think it's over $1 trillion plus has been created in value, $1.5 trillion, and in very liquid assets. We're talking about Solana, Render, even Filecoin, Bitcoin, Ethereum. A lot of wealth has been created. What I've seen, having been in the space for such a long time, is when you have this much wealth creation in a short space of time, 2 things happen. People start selling, spending, putting money away, especially if you've been in for a while. Secondly is when the going gets tough, people cash out. So you'll find that a lot of engineers, and you guys, I'm sure you probably see in your companies and portfolio, but a lot of people are losing engineers because they've made so much money on Bitcoin, Ethereum, whatever they were buying in the bear market cycle. They cashed out. They're going to go leave and go start their own crypto project, or just,
so you think
say, hey, I'm going to.
You think the
money's being
created too quickly? You think the money's being created too quickly, and and therefore there's an incentive to leave? I'll tell you a story in that regard. So we have, in the office, you have people that work with us, and up until now, I guess that a large reason why they work with us is because of a salary. And you take the average salary of someone in the office, and let's say that the average salary, I don't know, just for shits and giggles, let's say it's $4 or $5 grand a month. Now these guys have all made hundreds of thousands, if not millions of dollars on meme coins. Okay, so these guys.
Why would they put up with your shit if they don't need to?
They're not. And so the biggest problem that I have right now is that no one wants to work. And I know you're laughing. But we're running a big business with 65 people, and the biggest challenge that I have right now is that everybody's just making too much money. And there's no way that I can incentivize them financially to continue working here because everybody is making much more money on gambling. Let's just call it gambling because I don't think any of it's real investing. So the biggest challenge that I have right now is continuing to run a business where there are there's very limited resources in crypto. You'll agree with me. Specifically people who can research, who can engineer, et cetera, et cetera. If they're making much more money in the casino than they're making in their job, and it's not 2 to 1, it's 20 to 1, it's 50 to 1, it becomes almost impossible to run a business. So I think what you're saying actually resonates pretty well with me because maybe too much money has been made too quickly, and we're destroying our business, our industry.
You're not. So this is the thing. You're not the only one having this problem. This is an industry-wide problem right now, where too much wealth has been created for the people in it. So the thing about engineering and building products and companies, and like I said, I'm not an operator in crypto per se. I'm still chairman of 𝗬𝗏, but I actually operate 𝗬𝗢𝗡𝗏, we're in the AI space. In the crypto space, what I'm seeing across my portfolio and lots of places is this froth has basically made it so that people who don't want to have tough times at work and grow as people, like engineers who are struggling to work with managers, work with the teammates, fuck it, throw in the towel, sell my crypto, I'll go lie on a beach somewhere, do my own thing. And in the past, like people would, and someone who's managed people through various stages of their careers for decades, when like I remember one person who was going through a really tough time. I sat her down. I had a really, really, really big heart to heart with her, and she worked through the problems. And years later, she started winning awards for best in class in the industry. And she worked for me, right? Not happening anymore. People are going to throw in the towel the moment the tough, the tough conversations get had. Well, hey, I made more money than you last year. I'm going to leave now, and I'm done. And that's happening across the industry. You're going to see, and you're going to see more and more churn right now. If this market gets even a little hotter right now, companies in the industry that are building are going to suffer, especially companies that don't have a well-established corporate culture or company culture where people actually feel like this is a good, well-run company. So you're going to find people who are really bad CEOs, bad operators are going to lose staff way too prematurely, which is bad for them as well, because I became I think a good CEO or good operator, but being a bad one initially, and then learning from people leaving me and telling me why they're leaving, and then go, okay, I need to treat people in a different way. I need to help them grow better. A whole generation of entrepreneurs and project founders are going to lose the opportunity to learn from how they deal with people and how they help people grow within the organizations, because people are just going to punch out the moment they can because they just don't need the relatively low salary relative to their wealth. And that wealth effect, especially for young people, is very dangerous because they're going to come back in a few years because they punched out early and not have the skills to go back into the workplace and work through an organization because they just didn't work through the tough parts, especially when they were the ones at fault.
I must say, for me,
I'll take those out of this.
Yeah.
Okay.
Go for it, Ishan.
No, you go.
Yeah, go for it, please.
Yeah, I'll take those out of this. I think so. Everything you all are saying, I think, is correct. But I'll note two things. One, I think if you look at really outside success, you look at Zuck, you look at Warren Buffett, you look at Bill Gates, you look at like truly like world-changing kind of scale. It disproportionately comes from people who had money before. Like Elon Musk is not starting SpaceX and buying Tesla and doing these things without having sold PayPal and without having sold, most people may not realize this, he sold a company for $300 million in the 90s in the first internet bubble. And so I think that if you believe in sort of the great person of history kind of theory, these like unique individuals that can really move markets and create breakthroughs, actually giving them $5 million and freeing them up from these day-to-day things is really, really
I'm not worried about the unique individuals. I'm just worried about the cogs that make the machine work. The unique individuals have a culture. The cogs that make the machine work, which is what you need in every business, that's the people that I'm losing.
But the question is like, can you? On balance, it kind of goes back to the same sort of thought that we have with the speculative casino stuff, which is like, okay, absolutely, the average person that's now made $1 million or $2 million may say, you know what, I don't want my receptionist job or my desk job anymore. But at the same time, how many such Elon Musks did you now unlock because of this at the same time? And I think in aggregate, that's actually going to be net really, really good.
I hear you.
I disagree.
Because
let's hear Ishan. Let's hear
everybody
Ishan's
else will just burn through.
Let's hear Ishan's
long enough time. It's actually really bullish that this happens and this like wealth effect happens because you get this like larger distribution of wealth. And so then and that's kind of goes into the thesis of like maybe we're gonna have a longer cycle because there's a lot of cases where this is gonna happen, but then those people are going to sell into stronger hands. Stronger hands are gonna come in the market. They're going to get more bullish. You're gonna have a better distribution. And then you don't have as many large sellers at those higher levels. And number goes up a lot easier when you don't have these massive sell pressures. So I think like if on a long enough time horizon, if we're looking at like cycle wide in like the next 2 years, I actually think it's relatively bullish that happens. And I'm not disagreeing that it does happen. I think 100% it happens. Anecdotally, like I had, one of the top guys on our team left because he made a bunch of money on the hamster coin stuff, right? And it happens. But I actually think on a long enough time horizon, when people do that, it has actually ended up pretty bullish.
I also think like what's going to happen for a lot of these, I think it's actually really good. Like, because what happens for anybody who's made money is you go through an existential period. First, the money hits. And you're like, this is amazing. I can buy the new car. I can like pay off my mortgage. I can like go sit on a beach for 2 years. And then you do that for 6 months and you're like, what the F am I doing with my life? Like, this is terrible.
I hear you, but I'm still suffering today because my staff are leaving. Listen, I'm reading the chat.
But I think what it does is it puts the onus on the operators to create better businesses.
Who is bearing the cost of this? This is my question to you guys. Who is because the money doesn't come from it. Like, let's not have a US dollar approach to things. Where does the money come from in crypto? Because someone has to pay for someone else to go sit on a beach. It's not like you're making 10x in 6 months is not normal returns by any stretch of the imagination. So it's a zero-sum game to a large extent because there is no yield in crypto. Like, there's no dollar yield. So it's a zero-sum game.
Retail's paying
on short term, yeah.
All right, let's move on.
That's what I keep coming back to is like on both of these, it's all short term versus long term. On the short term, it's a lot of pain. In the long term, actually, I think it's net positive.
Okay, so the guys.
It's okay when rich people say there's a lot of pain. I mean, I get it. Okay. But I feel for the man in the street who doesn't have money, dude. I came from Africa. This is like Grant. And I watch poor people putting like, I got friends in South Africa and I've got like, whatever. And they message me and they're like putting in small amounts into these stupid coins. And I'm like, dude, really, you can do something better with your $500, $1,000 and trying to gamble. Yeah, but
can they?
Desperate. They're desperate, but then it's gambling.
I don't know if they can. That's the thing. Like, can they? What can they do? I mean, like I had a conversation. I may have told the story on a prior conversation. I had a conversation with a guy at Whole Foods. He was stocking the shelves, and I forget what I was wearing. I was wearing like I don't know, some crypto shirt, and he knew it. He was like, oh, is that Monad? And I was like, whoa, how do you know that? And so I started talking to him, and he was telling me about L1s and L2s and Monero, and I was like, holy moly, like you're really deep on this stuff. Like, how do you know all this stuff? And he's like, well, if I save money, like how much do I make for stocking the shelves at Whole Foods? at the end of the year, if I save all my money, I have like $500, $1,000. Like, what am I going to do with that? And probably something's going to happen where I have to like lose it anyway. So it's not like I'm making any progress. I might as well throw $500 at this thing, and if it turns into 50, great. And if I lost it, I lost $500. It's not like that was going to save my life if I.
So it's the biggest.
Anyway.
What you're saying? It's the biggest risk return. It's the best risk return for the normal person ever. Vinny, I want to jump to the next thing because the chat here is going crazy, and what they're saying is they want alpha. And I think by alpha, they mean they want to hear what narratives you guys are looking at, specifically the investors. What other narratives are you looking at? Like, is AI a real narrative in crypto? If yes, tell us, what is your thesis around AI investing? Ishan, I know you're talking about gaming, gambling. What are the thesis? What are the narratives that you guys are most excited about? Avishal, I'm going to start with you because you've got, as you said, you've got a lot of money to deploy. So you must be looking at a lot of different narratives. What are the narratives that are exciting you?
Yeah, it actually is piggybacks on what we were just talking about, which is I think in the short term, capital formation in these casinos do happen in every market. We have to be really mindful of that. I think Vinny's right that it concerns me that the people losing money here are going to be retail. On the flip side, I think if you can take that and funnel that towards actually productive and useful things, then over the long term, everybody actually net benefits. And so we basically look at what are things that are actually useful. And so a couple categories of those things, I think there's still a lot of work to do on scaling, right? So we're investors in companies like 𝗧𝗱 and Eigenlayer. There's still plenty of work to do on that. I think getting productive assets on chain is really important. So real world, RWAs as they're called, real world assets, is a big thing. And I think actually if you think of the on-chain markets as a giant capital market, a 24/7 global capital market, and the killer thing that's actually happening here is not just speculation, but it's actually capital formation. Like speculation is one form of capital formation. ICOs were a form of capital formation. Then what we could do is take all that capital and funnel it towards productive use cases. And actually, if you look at things like, let's say reinsurance, if anybody's ever looked at Lloyd's of London as a business, it basically looks like DeFi protocol. Like these people go out and they find opportunities, they bring it back to these capital pools, they sort of tranche up the risk, and like a bunch of LPs go into a reinsurance, and you can make 18 to 25% a year on your money, like if you do it right. In like a very good risk-adjusted way. The average person just doesn't have access to those kinds of products. Like if you're in South Africa, if you're in Southeast Asia, if you're in Latin America. And so opening up those kinds of opportunities to those capital markets means that those people can now all of a sudden start making 15% productive yield because it's actually going into things that are productive in the real world, like insurance. But they can actually now make real yield instead of pure speculative yield.
So scaling real world assets, and I think I agree with you very much on the thesis of real world assets, and we've seen a good couple of steps in real world assets. I want to prompt you specifically around AI, the AI crypto crossover. Bullish?
Long-term, very bullish. Short-term, worried about the hype. Most of the things that are AI coins today are pure meme coins. Like they don't actually work. When you start digging into it, you're like, how much revenue is this GPU network really making? And the answer is near zero. In theory, it works, but in practice, nobody really is using these things. And the valuations, for these token networks is just kind of crazy town. In the long term, I think over like a 7 to 10 year time horizon, I'm extremely bullish. And the reason is that not in a financial sense, just in a usage sense. And what I mean is I think that if you think about what's really happening here, in the limit, a lot of these AI things end up as agents. Like what we've really done, which is like the crazy, crazy breakthrough to think about, is we've invented a new kind of entity. And V1 of that was actually a smart contract. V2 of that is what we call an AI agent. And what it is it's a non-human, non-business entity. It doesn't live in a jurisdiction. It lives in the cloud because it can be replicated on multiple servers all over the world, but it can interface with humans. And so it can talk to a human, it can be a counterparty to a transaction, it can hold money. And if you think about that thing that lives in the cloud, it's actually a huge regulatory challenge. It's the first time since literally the invention of the corporation that we've had to think about like, what is this new entity and how do we regulate it? But if you think about that thing, it can't walk into a bank in KYC. It doesn't exist as far as the government is concerned, right? And so it has to use crypto rails. It has to use 24/7 global micropayment transaction rails. It needs command line money and it needs a wallet that it can custody assets in. So AI agents have to use crypto. And so in the limit, like if you think of these things almost like people, and what we've created in the cloud is a new country, like the GDP of that country has to run on crypto. I think that takes about 10 years. I don't think that happens in 2 years. So in the limit, I think it's like all of this crypto infrastructure, the actual users of all this crypto infrastructure might turn out as actually AI even more so than humans.
Yeah, I don't have a ton to add on the AI stuff. I really love the idea behind like I think the Lido guys like Konstantin kind of coined the cybernetic economy thesis, which is that you're just going to get this convergence of AI, blockchain, robotics, and a few other areas, and they're all going to converge into this place where they're all going to seamlessly interact, and that's where you get probably the next massive like shift in the production possibilities curve, and like you get all of this technological innovation because all of these incredibly interesting, nascent technologies are going to converge at a certain point, and that's where you get like the figure robot type stuff that uses open AI that transacts via like an Ethereum L2 or something like that. But I'm much more interested in what Vinny has to say.
Vinny, you're in AI. You said that you're an AI operator now. So do AI and crypto meet? You're on mute, sir. You're on mute, sir. You have to unmute yourself, sir.
I agree a lot with what Abhishal says. I think that there's a lot of hype in the AI sort of narrative versus the usage. But I do think humans are very bad, and we know this, at seeing sort of exponential curves before they happen. And so I'm seeing that there's a lot of demand. I'm also an investor in Definitive Intelligence, Sunny Madra's company, which got acquired recently by 𝗥𝗢𝗡𝗏, which is the LPUs. Basically, it's NVIDIA 2.0, I call it. And they've been building chips dedicated for LLMs. And so I think that as we start seeing advancements in the hardware, you're going to see more things possible in distributed compute and GPU and as it migrates out there. So I think it's all going to happen. It's actually happening a lot faster than people think. Like this stuff is accelerating quickly. So as an investor, and that's obviously private stuff, stock, no one can buy that. But that's 𝗥's a company to watch for now.
But I want to ask something. This GPU problem. So I mean, I've heard two theses about it. The one is that there's a short term relative to Avishal's 10 years. There's a short term GPU shortage, and so we're getting a whole lot of these companies like Render.
Long-term GPU shortage. It's not a short-term problem. This is a long-term problem.
How long until they solve the GPU problem? Because the reason why I'm asking this is I've taken a lot of investments in companies like Render, like IONET, like GPU.net, like all these distributed GPU companies. But the one thing that scares me about my thesis is what happens if they just solve the GPU problem? What happens if the chips become better, faster? I don't know what the answer is, but I mean, is this a 20-year problem?
It depends. Depends if China invades Taiwan or not. If China invades Taiwan, it's a 20-year problem or 10-year problem. It's a long-term. So it's already a long-term problem with a pending invasion of Taiwan and a disruption of the global supply chain around semiconductors. Okay, and so if you look at things like Render, for example, Render is the only company I know that's working with Apple to enable distributed GPU compute across all Apple chips, M3, M2, etc. So if we did have a problem, you have the Render network, and they've already onboarded 3 or 4 ML clients. All the other GPU networks cannot access those chips because Apple doesn't allow it. They're the only Apple partner that allows it right now. Apple's the only game in town that is independent really from TSMC and what happens in Taiwan because of their distribution right now. And when I say distribution, what they've already got running in the world. Apple, when they do an update, it goes to 1 billion devices, right? So you can tap into existing GPUs in the market. You can use that, provision that. There's 2 parts of the GPU problem right now. One is new chips coming into the market, and the second one is repurposing existing ones, right? So if China blockaded Taiwan next week and said, okay, no more chips are in and out, we're going to have a war, whatever, and there's a blockade for a year or 2 or something goes on there, what happens is the rest of the world is going to figure out how to use the 4090 RTX 4090 NVIDIA sitting in my gaming PC, in the next room, and use that compute power when I'm not gaming, because I don't game, 22 hours a day, whatever it is, 23 hours a day. Like I'm not using it that much. That compute power can now be used in the world. If we get to a point in the world where the supply chain gets disrupted, we will find a way of repurposing unused GPU compute on a global scale to enable AI. The demand for AI coming out of companies, corporates, businesses, whatever it is so great. And right now, all they're doing is they're buying new supply. We're not very efficient with using existing GPU chips in the market. And this is why I think that distributed GPU compute it's a very good hedge for the next 12 months. And by the way, if you look at what's happening politically,
12 months, I hear you, but these protocols aren't going to make money in the next 12 months. We're investing in these protocols because they're going to make money in 10 years.
That's not true. Again, you're looking at a world where supply chains are not disrupted. Okay, you have a U.S. election that's happening in November. You have the chance that China actually does something in Taiwan while the Biden administration is operating, because they won't do it probably not in the Trump administration. So if they did it in the next 6 months, you can see a total turmoil in the global supply chain disruption. I mean, I'm not sure whether it's verified, but something like 30 warships were entering Taiwanese waters yesterday or something. I saw so like, we don't know what's going to happen in the next couple of months. And while the Biden administration is running right now, we don't know what's going to happen, what China's doing. And Xi has got a lot of problems to deal with right now, and this might be his only card that he can play. So it's, again, I agree with 𝗪𝗡𝗆 that right now the numbers probably don't make sense, but the market is telling us that it's factoring in something unknown because these valuations are super high, and it's not unknown. It's a known thing.
𝗪𝗡𝗆, what do you think? What's your thesis on the decentralized GPU thesis? Like, is this something that your fund looks at? Is there a thesis around it?
We've looked at it a bunch. We haven't made any investments there. The thing we've always struggled with is, which is always true in any market, even in the public equities markets, is you can believe that the fundamental usage of the thing will continue, but the question is, what are you paying for it, right? So is NVIDIA worth what it's worth today? Is Apple worth what it's worth today, and why? And how much of that is already baked into the market? And so from the investment lens, like, the thing I worry about is, having seen the crypto cycles, I actually worry that a lot of the AI stuff, both in crypto and outside of crypto, is just so overhyped right now that you can't, like, you have to make such wild assumptions about what's going to happen over the next 10 years to make any kind of reasonable return, that it's just not the right place to be deploying capital. And so we're sort of taking a wait and see approach. I also think that a lot of these things, on the hardware side in particular, I think we have, over the last, if you look at the last, let's say 25 or 30 years, let's say post 1990, so much of what has driven markets has been software and financialization. And those are effectively bits, not atoms. And those things move really, really, really quickly. And so we've forgotten how long it takes for the world to move atoms or do things with atoms. And so any of these, like, chip supply shortages, or like figuring out how to retool this stuff, or like, get enough power to power all these things, that kind of stuff is going to take a decade. And so we also sort of, I think, take the approach that we have a lot of time to figure this stuff out. And so you don't need to rush into it. With pure software stuff, like if you're building a new social network, you kind of have to rush into it, like, because it's a land grab, and the cycle is so fast in terms of adoption. For anything that involves hardware, often, like, you can be pretty patient, actually. It's going to take a long time to play out just because atoms are so hard.
Okay. I want to just quickly jump to the layer one. You spoke about scaling, and you spoke about, the fact that...
I have another... I got to leave in a minute or so. Let me say goodbye.
All right, so Vinny, thank you. While I've got the other guys on, we've probably got another 5 minutes together. Layer ones. I mean, you mentioned that we haven't solved the scaling issue. We do have applications like Solana, and we do have applications like Near Protocol, and a whole lot of other layer ones. Then you have the whole ETH layer 2 landscape, and I think Base has now shown us, the potential to scale the ETH layer 2 landscape. Do you still not think that the scalability has been sorted?
I think it's getting there. I think we've now introduced other sets of problems. There's still a lot more to do. Like, I think because it's not just scalability; it's scalability without compromising too much on the underlying decentralization. That's sort of the rub, right? It's not, let's just throw a server in a data center. And so I think there's still a lot to do, right? There's still how do we secure these things in a decentralized way, so things like 𝗪𝗡 on the L2 side start to matter. There's still a lot of work to do on the EVM. Like, if you compare to the SVM, or you compare to some of the Move ecosystems. And so, Ishan's wearing a Monad shirt. And so, parallelization of the EVM, I think, is going to be a really, really big win. Data availability is just getting off the ground in the modular side. And so, there's still a lot of, like, you're starting to get to a place where technically it's possible to do a lot of things, but we haven't actually brought all the pieces together and made them work seamlessly, and then built a developer tooling layer on top of it that abstracts a lot of this stuff away to make it really easy for devs, so that they can then build really great apps for engineers. So I think we're just starting to make it possible.
In terms of the bets that you've taken in that in the scaling? What are some of the bets that you guys have taken?
Yeah, well, I mean, our approach is, you want one. I guess we have an opinion that there are going to be multiple layer ones. Like it isn't a winner take all market. And even in pure network effect businesses like social networks, you saw regional fragmentation. So you have like KakaoTalk and Line, and you have sort of regional network. You have different sorts of audience fragmentation. So you have like TikTok is different than Instagram, is different than Snapchat, is different than Facebook. And so these things can all coexist, even in sort of pure network effect businesses. And obviously not financial advice, but that leads me to believe that the L1s there will be many, and they will all coexist, and they will solve different problems. And so the kinds of problems that Solana can solve is just different than the problems that Ethereum can solve, is different than the problems that NEAR will be able to solve. And then they'll have regional network effects, and they'll have sort of cultural network effects because of the audience. And so these will all coexist. So our approach is you want exposure to anything that's credible. And then over time, who knows what happens. And so, we've taken, we were seed investors in NEAR, we were relatively early in Solana, we, have been involved in the ETH ecosystem for a long time, and we're helping, in things like Eigenlayer and 𝗧𝗱. So we sort of invested all around this stuff for some time. But it's a little bit unique, I think, because it is going to be not a winner take all, in our opinion, which makes it a little bit easier as an investor too, because you don't have to pick the one winner, right? You can sort of directionally be right about a lot of stuff and do quite well, I think.
So your thesis is we don't know how it plays out, we don't know who's going to win, therefore take a whole lot of bets and just hope that and trust that they'll all find their different niches, and we will
as long as they're like technically credible. The analogy here would be if you could go back to 2005. And you were a venture investor, because again, we do sort of early stage venture investing, right? If you could have been a venture investor in everything social, and you couldn't at the time because they would have been seen as competitive, but you could have done High Five, Bebo, Tagged, Facebook, LinkedIn, Twitter, and yeah, you might have lost a bunch of money on the ones that went to zero, but you also could have hit LinkedIn and Twitter and Facebook. And if you did it at the Series A, you did great. So as venture investors, we kind of get to cheat a little bit because we're not paying the final round liquid prices. We're paying very, very early, and then it takes 4 years to get to market. But you don't have to, if you're directionally right on social, and really we were inspired by this. If you look at the history of early internet, I think the people who got this right were really Peter Thiel and Reid Hoffman, because they saw social happening in the 90s and they're like, this is just too early, but they kept playing with it. And so by the time they saw social happening in the mid 2000s, Reid went off and started LinkedIn, but he was also an investor in Facebook, and they were also investors in Zynga. And so they were sort of playing this in the right way, which is you kind of want to spread your bets around if you think that there will be multiple big winners.
So multiple small bets, and then just leave them, especially when it looks like that the protocols aren't going to make it, just ride the wave. If it dies, it dies. And if it succeeds, hope that it succeeds like a Facebook or like a LinkedIn. 𝗓𝗏, you were nodding.
That's the venture game.
Yeah, 𝗓𝗏, just got 2 minutes just in summarizing.
Yeah. So I think on the L1 side, I do think it's going to be a little bit of a winner take most market, and I think we're already kind of seeing that. And then you're seeing layer 2s for scaling, and I think those are going to be more regional specific and different ways that they have value capture, different ways that they onboard users. I think you're seeing a lot of this. One thing we're really excited about is like the exchange ecosystem, and you're starting to see all these exchanges create their own ecosystem. So when you think about onboarding users at scale, having that funnel directly from the kind of onboard to getting on chain, we think is really powerful. And so you see this Coinbase with Base, you're seeing like, BitGet launching an L2 or like an L2 ecosystem. You're seeing this, obviously Binance has been kind of the pioneers of this. And so I think you're going to start seeing a lot of, I think it's going to be winner take most with probably Ethereum as like this global liquidity settlement layer. I think you're going to have a lot of different execution environments. You're going to have like your Move L2s and things like that. And, people that are building different things. And then I think you're going to see user funnels and different value capture mechanisms within those. And that's where you see your, different exchanges launching L2s, your bases, your, BNB, or they're doing like an OP BNB L2 and things like that. And it comes to, and then the last piece is just kind of like the network effects of it all, which is like, onboarding 20 million users with Coinbase that's mostly US centric is very different than Binance onboarding a huge percentage of APAC. And those network effects aren't necessarily shared. And that's where I think you get into the regional thesis of, the network effects are going to be shared across different regions. And like APAC is going to have really strong network effects. A lot of applications are going to interoperate and compose with each other there. Same thing in the US. So that's just kind of, I think it's going to be winner take most at the L1 level. And then L2s are going to be very interesting. But I also think there's a world where you're going to see like L2s going to different chains, right? There's no reason why you can't have like Monad as an L2 and on top of the parallelization that they have.
You guys are really rubbing the Monad salt on my wound. You know, I told you a story before we went live that we were in the round and they basically pushed us out of the round. And since then I've got salt on the wound because a lot of the guests come in here and talk about monads. It's like, what are you guys doing? Are you trying to kill my wound? Guys, we're absolutely out of time. Like, we're actually over time. Want to thank you. Much love. Thank you for all the alpha. What a beautiful way to end the week. Thank you, Shan. Vinny, well, he's gone, but thank you. 𝗬𝗓𝗏, thank you. So good to see you. Guys, to the Banter fam, we will be back on Sunday. On Sunday, we're having another meme coin degen dirty show. But remember, it's not going to be on Banter. It's going to be on Banter Plus. We'll see you again on Sunday. Until then, trade well, my friends.